So I specifically came on today to basically hold hands with everyone who's in SMCI. I don't think that there is going to be a problem tomorrow. On the contrary, the amount of demand that's out there, and literally, like, we got the playbook from Google, from Amazon, from Microsoft, from Meta, that they are expanding spending on CapEx, which means that money is going to eventually bleed into these guys. Now, if this was a fraudulent business, no one would be doing business with them. Okay. And the products would not be real. That's completely the opposite. Like you saw with Elon and what do you call it? The XAI team, they posted like their super cluster. All that stuff was SMCI. Even Google's TPUs, like the infrastructure is partially Supermicro. Okay. So there is no demand issue with Supermicro and its products. Have they been doing some aggressive accounting? Absolutely. I think that this is something that's kind of like built into their growth model, and they got caught a little bit with the numbers, but that's something that I think isn't something wrong with the fundamental business. It's just something wrong at the accounting level, which can be solved. And once it's solved, it's, SMCI will do really well, and all the people who are in there are gonna reap the benefits of it. So I expect tomorrow the resolution of some of these things to come around. And yeah, I mean, bro, I'm all for it. I have a ton of SMCI.
Oh, okay, hold on. How like, let's say your SMCI stake went to 0. How upset would you be on a scale of 1 to 10?
Probably like maybe a 2 or a 3. You know,
but it's still enough where you made a big bet on it essentially.
Yeah, I've made a pretty big bet on it. I mean, but the thing is, like, look, scared money doesn't make money. All right, sometimes you got to take your chips and know when to go all in. So, I mean, I'm not all in on SMCI. I'm just saying, like, I just know right now there's nothing fundamentally wrong with the company. There's just fundamentally something wrong at the accounting level, which can be chalked up to paperwork and everything else. And once that's resolved, it's like the value. My thinking is always the value of the product always outshines the value of certain aspects of reporting, and especially when you're in hyper growth mode, bro, there's going to be revenue recognition issues. Okay. This business is growing at 200% year over year. Like, how do you even account for everything? And not to mention, you have a multinational supply chain. A lot of the stuff that they described in the short report was very, in my opinion, subjective. They're like, oh, they're not recognizing this. Their auditor leaving them like in the middle was probably the most damaging thing. But in my opinion, it's probably because they didn't want to deal with the correction portion of it. And the fact that, they got someone bigger like BDO to come in, that's also a sign of confidence to me. So
what is the bear case for tomorrow? How do you think tomorrow it gaps down 20%? Do you think there's any world where that happens?
I mean, dude, it's always a possibility that they come out and they say, look, we're not going to be able to file again, and we're going to ask for another extension. If they say that, bro, all hell is going to break loose, because they've got multiple extensions already, and they've got a deadline of February the 25th. I'm not so sure the NASDAQ is going to want to give them another extension on this, so that would be like the end all, like, holy shit, things are bad, So we'll see what happens. That's the bet we're making right now.
What do you think of Bill Ackman buying $2 billion worth of Uber?
I think he might be onto something in that Uber might be platformicized as opposed to like a complete like disruption, right? So as an example, there's already like how many active users on Uber?
150 million.
And so there's keeps expanding that. So like right now, if you go to Austin, they're working with Waymo in order to get the ride hailing service from there. So the thing is, there's a huge amount of work that needs to be done to build up the infrastructure to get to that point where, they have scale. So a lot of these ride hailing companies, they might just use Uber as that ride hailing platform. I don't know. Like, that's something to just keep in mind.
But do you like I mean, this is a pretty heavy bet. Do you like him taking this type of stake? Do you think it's for a recovery, or do you think he legit thinks Uber can be a $500 billion company one day?
I mean, in my opinion, I think that Ackman sees value in the business. Otherwise, he wouldn't be in it, right? But that's the thing. Ackman's also pulled out of companies way ahead of time also. So I don't know. I don't know what to say about Ackman's personal like stake in this. I just think there is definitely value in Uber. I don't see it being disrupted at any time soon. I think the the thought pattern that they would be disrupted within the next 2 to 3 years by what is that thing called, autonomous cars, is still far fetched. I still see on Twitter, and I'm sure you see it, where there's still autopilot failures where the cars go into like poles and they need interventions. So that kind of stuff, I believe that autonomous driving is not there yet, And
so on the flip side, what do you think is going on with Tesla right now at 350?
I mean, bro, Tesla's got a PR issue. They got a major PR issue right now. I mean, as much as I want to, I believe in Elon and what everything that he's doing is absolutely like what the country needs. It does hit the PR part of Tesla's business because he is a representation of it. I mean, and this is where it goes right back to like Michael Jordan when they asked him like, hey, what do you think about this thing? And he said, well, Republicans buy my shoes too. So the thing is, by Elon being so close to the Trump administration, I'm almost certain that there's going to be a whole set of people that are probably going to be like anti-Tesla.
But
right?
do you really think that's the reason Tesla is down from 400? Do you think it's politics, or you think it's earnings?
I think it's the anticipation that the politics will impact sales. So that's like one thing. The other thing is the data that's been coming out is that Tesla's not exactly doing the greatest in Europe from what I'm seeing with the numbers.
Yeah, that's not
so.
Best. Yeah.
So a lot of people are like, why take the risk with the valuation being as high it is right now? The favorabilities for EVs are starting to kind of miss also. Like you see this on semiconductor miss. That on semiconductor always leads me to believe that that's like the leading indicator for electric vehicles. A lot of companies are kind of shying away from EV only.
Hold on, real quick. What exactly does on semiconductor do in a nutshell?
On semiconductor makes like semiconductor chips specifically for EVs. I forgot which part of it, but basically they're in almost all Teslas.
Gotcha.
And I forget what the exact component is that On Semi makes for them, but yeah, it's
them missing to you is a signal that Tesla demand is down. Is your point?
More than not just Tesla, but EVs in general. EV adoption, if it slows down, and Tesla being the leader of the EV adoption curve, that means that they're likely to see the most dramatic dip in demand.
Okay, so that's what we got with Tesla and Nvidia. I don't think the chat got to hear your thoughts on Google post earnings. So, I mean, I bought the dip at 183. Are you buying the dip, and how are you thinking of Google right now?
I'm buying the dip on Google, bro. Google is just on another level of demand. Like the one part that I definitely like missed was, would they be capacity constrained? I didn't think that they would be, but they are, and they've really like listed out a lot of capex. So I think the market is like, wait a second, like you guys are like, I hope this is not one of those 2021 scenarios where each one of the hyperscalers was competing for people and overspending. Right. And that overspending resulted in inefficiencies for shareholders. So maybe the market is interpreting some of that. But in my opinion, I think that's wrong. I think Google sees a lot of demand for its services 3 to 5 years out, and they're just building the infrastructure now. They see, like you said, I think AI, we're in the second phase of AI where I think a lot of the models are good enough to the point where they can actually be integrated into the application layer. And that's why we're seeing companies like Palantir, and even Snowflake is almost at 180 something now. Like all these new products are coming out with AI features, and all of them run on some of the models, or they're model agnostic. But the thing is that inferencing is going to play right into the hyperscalers. So I think the hyperscalers know that. They're willing to spend money on it now so that they can reap the benefits 5 to 7 years. Because, I mean, that's what it is. You buy the chips now, you integrate them into data centers, and for the next 5 years, you can sell the compute over and over and over.
Right. How are you feeling in general about the economy? I mean, we do have CPI coming up this week. That's important. We have January retail sales. Do you think there's any specific numbers we need, or has earnings growth been superb, which, I mean, it's been pretty damn good so far? that inflation is just not that much of a concern anymore?
I mean, Doge is definitely, in my opinion, going the right direction with government spending cuts. And I think what it is the new tax code is supposed to come, like the new, I think budget is supposed to be done in like March.
Yeah.
Right. So a lot of the spending cuts may come from that. The thing is, remember, when it comes to the economy, the more the government spends, the faster the economy runs. The economy is running kind of hot right now, so we might see a slowdown in growth. But then again, the Trump administration is also baking in tax cuts for longer, and there's like, what is it called, like growth initiatives out there as well that could help, like lower cost of energy. So like the government is trying to do this balancing act where they want to cut deficits, but they don't want to slow down on growth. They want both to happen, and I think that's a really hard thing to do. I think we might see more of a happy medium where, spending will definitely slow down, but growth will slow down a little bit too. In which case now you have to ask yourself, with valuations being where they are, how would you want to position yourself? And I don't know, for me, one of the things that's a little bit scary, and, this is just me saying this, when retail participation starts to increase significantly, it's usually a leading indicator of a top. I don't personally think that there's a top at the moment, but when I see companies that are pre-revenue or no revenue start to run on like Oklo and some of these other companies like running really fast, like ASTS, they're promising technologies, but at the same time, they're not making any real money yet. And so when I see that, I automatically think to my brain, like, what other time did you see that happen? And that .com bubble comes to mind, 2021 comes to mind, right? So valuations right now are really at a high. So the question that I'm asking myself right now is, when will the musical chairs, when will the music stop? I don't hear it stopping yet, but I'm seeing the signs that there's a lot of people rushing in the door and buying things based on no fundamentals. They're just buying things on, speculation. And the more and more people get into speculation mode is the more of the time that we should be shifting away from equities and maybe into like more fixed income and things that are gonna weather a recession. And it might be a short recession or a medium recession. And just to counter that, because I think there's a counter case against that, is that we have Trump in the office, and Trump is naturally a person who looks at the stock market as his barometer for success. So if the market does take a dip, I'm sure that Trump will probably push through policies that would likely bring it back up again. So that's why they call it the Trump put. It's such a weird scenario to be in this year, trying to figure out like what to do, like which part of the needle to thread. But yeah, I think this year will be good for people who know how to pick stocks. I'm not so sure the index investors are going to do that well, but I do think that if you really know how to pick good companies, they're in the right areas, you could absolutely kill it in this market.
Yeah, and you do have a point, dude. If Dave Portnoy can pump his coin to almost $500 million in market cap, I mean, there's a lot of money that's out there, and it is hard to ignore that from a speculation perspective. However, to your counterpoint, I mean, if earnings are still going to be amazing, right? Like, how do you weigh that? I guess so that earnings are amazing, but there's all this speculation. Is the answer just pick the right stock and try not to be stuck in a situation where earnings might get worse for certain companies and then everything collapses?
I think it comes down to expectations. Like the more you rely on something expecting it to happen, the less likely it is to happen, right? So if you're expecting like a company to double within the next year, it's very hard to double. But the thing is, when speculators come in around, they think that that's a normal part of the market. And the other thing is, a lot of people who are speculators, they expect a lot of returns very quickly. Like I've had this discussion with a few people, and they're like, "Hey, Chris, what's the next big play? What's the next 10x?" And I'm like, "What do you mean? Like, like I don't know how to tell you this, but there's like companies don't 10x in a matter of like 12 months all the time. That's a very rare occasion to happen." And they're like, "Oh yeah, I guess."
They're like, "Oh wait, Chris, why am I paying for your Patreon then? You don't know the next 10x. What's going on here?"
I know, but that's what I'm saying. But like, the thing is, when you see companies going parabolic over something as simple as news, it means that there's a lot of speculation in the market. And that's not to say that you can't make money in a speculator's market, but you just have to caution yourself and understand that set your limits tight so that when the music starts to slow, you get the hell out and preserve your capital as much as you can, so that this way, when everything is down, you could benefit by buying up stuff on the cheap. Like that. That's why Daddy Buffett right now is sitting on a crap ton of cash.
Yeah. Okay. So what do you think he's going to do with that cash? What is he waiting for, in your opinion?
I don't know, man. He's gonna. I don't know. Maybe he'll. I have no clue at this point. All I know is he's a value investor and he doesn't see value in the market. He thinks like the amount of risk that you're taking is higher than the total return that you're going to get from just being in treasuries. So his thing is, why should I go out, risk my capital, especially the amount of capital that I have is like hundreds of billions of dollars. You need to be very, like, with that kind of money, you need a massive downward movement so that this way you can deploy it at scale.
Yeah.
Right?
Yeah.
He can't do the speculating thing, because the only time, like, people like me and you, we can speculate on a company, it goes up 40%, we can sell out of it. Buffett can't do that. Buffett can't say, let me buy $1 billion of SMCI and then get out once the earnings is over. Yeah. Right? Me and you can fucking do that because we're small fries. So I don't know, for him to be out of the market and sitting in a lot of cash, he's still collecting a good amount of money, just like about 4 or 5% from Treasury. So he's thinking, like, from a risk adjusted standpoint, I could sit on the cash, and when everyone is desperate, I'll deploy the money. I mean, then again, he may not even be alive to deploy it. So,
all right, let's do a quick 5 minutes of rapid fire, guys. If you have any tickers, put them in the chat. I'm going to name a ticker to Chris and just get his quick thoughts on it. Elf, recovery or not? What do you think?
Dude, this is something that's very interesting. Someone was asking me about Nike also. And I was like, look, branding is one of those things that you have to have the mind of someone like Chris Camillo, right? Where he's constantly like going through a whole bunch of social arbitrage methods to understand if there's growth expansion there or weakening of demand. So one of the things that I noticed, and I got to credit myself a little bit, I called the top on Celsius because I started to see that the trend on Celsius was starting to get, go down. And so whenever your brand is starting to take a hit, you need to be out of there, So my thing is with Elf and with Nike and all this other stuff, do they have an issue with branding? And if that branding issue is there, how long can it persist? And right. That's something that I have no clue. Like, so right now, if you start to see more, traffic again, with the brand and people like really getting into it, then maybe that's something to buy. But until then, probably not. I wouldn't just buy because like the numbers are like it's quote unquote a value, because that could also be a value trap.
Right. Big Bear AI.
I don't know anything about him, bro. But once again, it leads me right back into what I was saying with the whole speculation thing, right? Like people just buying because other people are buying.
Yep. That is fair. Hims.
Hims is real. I mean, I didn't think that they were going to benefit as significantly as they did with regards to the GLP-1 medications, but they absolutely killed it. And I made the wrong bet. You remember when I had my thesis was on Weight Watchers? It should have been Hims.
Yeah.
It should have been Hims, because I knew that the GLP-1, especially the compounded GLP-1s, was going to be a big market. But I made the bet on the wrong horse on that one. So Hims was the correct one to go with.
PayPal.
Once again, it's like I feel like PayPal's a value trap. I don't know. I was short PayPal for a little bit, but I got out of my short position because I thought that they would have a massive problem because of their honey thing. But that just seems to be it got blown under the rug. It's like, whatever. No worries. No one cares. So I'm like, okay.
Okay. Path, UiPath. Any thoughts on that?
I mean, RPA is really a big thing. I don't know. Remote process automation, like, it's just, I don't know the value of it, especially in the AI world. I mean, I'm sure that there's probably use cases out there, but it's nothing that seems like transformational to me that like that UiPath is worth putting some real money towards. So I don't know.
Do you know this one? Aurora Innovation, AUR.
It's robotic process automation. Sorry, not remote. Robotic process automation.
Yeah.
Say that again.
AUR, Aurora Innovation. Do you know this one?
No clue. I haven't heard of them.
Okay. AMD.
AMD, I think a lot of people are very bullish on AMD because they think that AMD could one day challenge, they would benefit from inferencing. I think a lot of people are seeing this CapEx demand and they're saying, well, eventually that's going to make its way into like the coffers of AMD because AMD has still some inference, like, you know, the growth driver is going to be inferencing. But I don't know, like for me, when I look at it, I look at it from like 3 layers. Number one, it's ARM versus x86, and ARM is winning. And AMD and Intel are both ARM-based architectures.
Yep.
And then you have AMD, which is, you know, doing better than Intel, but they're still, you know, they're still there. So I don't know. I think Intel, I think AMD is like the middle one. So I think NVIDIA is probably going to be like the major winner long term, but the valuation on NVIDIA is like super, super high. And if we do see a cyclical top eventually, we could have a problem with even NVIDIA, AMD, and Intel. Like people forget about that semiconductors are cyclical. So let's say this year, all the big tech companies are spending all this money. But what if like next year they say, you know what, we have enough chips, like, or we have enough data centers. We don't need any more.
Right. Like
Google, AMD, Google, Amazon, Microsoft, and Facebook, they can't spend this level of CapEx forever or indefinitely. I think eventually that CapEx is going to come down. And when it does come down, the main beneficiaries of the current run are also going to be the main, the ones that are going to have the most problems. So we'll see.
A couple more ones, Chris. SoFi. Any quick thoughts on that?
Not really. I haven't looked at SoFi really that much in a while. It's just, to me, I don't see the big differentiator that gives SoFi a ton of upside. I mean, they are doing better in terms of their financials, but once again, you know, so all the other banks are up too. So it's not like, oh my God, there's some kind of alpha that SoFi has that other banks don't. The only one that I do have a position in is Nubank. And I think Nubank is a completely different beast in that they're growing like crazy in Latin America. You know, so they already hit a significant portion of the Brazilian market. They're in the process right now of expanding significantly in Mexico and Colombia. And I think there's going to be other markets that they start touching. And they're in hyper growth mode. So, and some of the capital investments that they've made in something like Time Bank, which is like South African and the Philippines at a very, very low valuation relative to the total market potential. It could be very, very value accretive to shareholders. So I really like the current CEO over at Nubank, and see that data TJ freaking bought $100,000. He's already up 30-40 grand on that.
Yeah.
You know?
Yeah.
So I think Nubank is the one to really watch out for long term. They have a very up and to the right business. Really, like the founder is great. He's, the company's being led by some amazing people. If you listen to this interview that they had not too long ago, maybe I'll send it to you. Really, if you get some time, listen to it. You'll see like the makings of a major, major bank in the future. So,
last couple, Archer. Any thoughts on this one?
Archer and Joby are interesting in that EV tolls, like in my opinion, were left for dead. Like I really didn't care. I was like, I don't think these things are going to make any sense. But this is typically what happens. Whenever like new companies come around, you're going to have like 10, 15 like entrants, and then eventually the strong survive and the weak die. Like look at Lilium. Lilium's done.
Yeah.
They went bankrupt. Right? How many other ones? Like there were like quite a few at one point. They all went bankrupt. Right? So the ones that are surviving right now are Joby and Archer. And if they can actually commercialize their aircraft, they could do pretty well. You know, it's just right now they don't have a single thing running. So it's really hard to value a company that doesn't have a business model that's put together yet.
Would you would you get excited for Take Two before Grand Theft Auto, or you think that's kind of priced in?
Yes, I am, bro. That is one of my biggest regrets, man, that I did not go heavy on freaking spreads on Take-Two Interactive for 2027. I know for a fact Take-Two, I think Grand Theft Auto is actually going to slow the GDP down by a couple of percentage points because everyone's going to be like, I'm taking like a month off, or I'm taking 2 weeks off, and then just playing GTA. You know, I think there's going to be so much streaming happening of GTA. There's going to be, dude, they've got a cash cow. Take-Two has a cash cow for the next 10 years. Okay. That is how
Dude,
big.
is it that serious? It's just
Yes.
is it like that? It's
absolutely, dude. Amit, imagine right now, there's like how many people actually play Red Dead Redemption? How many people play the original GTA 5? How many people are like, there are so many verticals to this. And all they've been doing is taking all that capital, punching it into this game. And when this game comes out, brother, I'm telling you, there are going to be massive demands. Massive demands.
Are you gonna take off from work and play the game?
I'm actually considering it. I'm not gonna lie. I'm considering it.
Yeah, see, I've never been a big gamer. I played Vice City a while ago, but I never like got super into it. So.
That's another thing. That is another thing. I grew up, my entire generation, and I'm sure there's people in the chat right now. I mean, how many, like, if you are between probably 35 and 45, you grew up playing games like Grand Theft Auto, and it's coming back to Vice City. Bro, just the nostalgia factor alone is going to see crazy amount of sales. Yeah. And then if they have like an in-game, like, you know, like system, they're gonna, like I said, they're gonna keep generating money, man. And the entire planet is gonna be playing this thing.
Sachin right here in the chat says, during my peak gaming days, I used to spend 300 hours on one game.
Yeah.
Well, yeah. All right, I can't keep Chris on forever. Chris, I'm gonna give you like 3 last ones. Shopify.
I don't know much about Shopify. I've never been interested in Shopify, so I can't really answer much to it.
Okay, Baba.
Okay, so you know me, I love China.
Oh, right wow, now, it's up 6% today. It's up 5.4.
I know. A lot of people gave me a lot of grief about China. I think China's in recovery mode. I think there's still a lot of alpha that's there, but I'm not trying to bet on one company. Instead, I just bought a bunch of FXI spreads. So I'm good with that position. You know, okay. So I'm just buying the index in China and just letting the market do its thing. And Baba being probably like a pretty big position within that index, I'm cool with it. Let it do its thing.
All right, last one. And I know you don't like talking about it, but people really do want your opinion because people are getting concerned about valuations, all that stuff. Palantir, I mean, how do you explain what's going on? And do you think this crashes and burns, or can this continue to stay this high?
I don't know, man. Like the market can stay rational longer than anyone can stay solvent on this thing. And I think they're in escape velocity mode right now with regards to like just the amount of interest there is in AI products. So until that interest wanes, their growth is going to keep happening. And it's just going to be confirmation bias after more confirmation bias. And people don't care. Like right now, if Palantir grew at a very significant pace for the next 5 years, it would still be overvalued. That's the level of overvaluation that's
Do you think the stock has taken a life of its own and the numbers aren't really what it's trading on anymore?
Yeah, I mean, it's pure speculation, man. In my opinion, it's speculation. So I think a lot of people are speculating on this, and it's, you know, if that's what you want to do, if that's how you want to invest, then by all means, go ahead and do it. So I think a lot of it is just speculation. So me personally, I know there's going to say, oh, you missed out on a 10X. I slept really well for the last like 10 months, 11 months. I'm happy. That's what matters to me. I'm no longer an investor where I need 10Xs to make, you know, investing worth it for me. I can take the 20% here, the 15% there, compound all of it together, and boom, I'm doing really well for myself. So if people need to have that kind of return and you wanna take some big bets, go for it. I'm not so sure Palantir at this level is the right time to do it, but once again, I don't control people's.
Yeah, I mean, look, you've done well regardless of Palantir. A lot of people have done well on Palantir. I think the big question right now is, are the institutions FOMOing? Because we know there's FOMO happening. Is it institutional or is it retail? And I think that's
it's just retail. I think it's just retail.
Yeah, I guess
retail's leading the way, and you know, there's indexes that probably have to add to, because you know that's how it works now. If you start to get, it's almost like this perverse system where if you have people buying your stock, the market cap goes up, and then when the indexes are rebalancing themselves, they have to buy your stock, even if the value is absolutely bonkers, you know. And then it becomes a bigger and bigger portion of the funds that are existing. So when it comes to index investing, especially when it's based on just market capitalization, I feel like that can distort markets as well. So I think that's why we're seeing some level of market distortion. So
I think that's fair, but I do think this type of a move is not retail. I personally think the retail that I talk to are selling, or they're at least trimming. So I think these are the big guys that missed it, and they're getting a little bit more excited. That doesn't mean it's not, incredibly volatile, but I do think some of the big guys are coming in. Piggybacking off Palantir right here. Last question for you, Chris. Anduril looking like they're going to raise at $30 billion. I mean, is this going to be the hottest IPO that you're looking forward to get into, or what do you think?
Yeah, I think Anduril is going to do really well. I mean, they're a disruptive defense company. I think there's a lot of potential for Anduril going forward. So we'll see what happens with regards to that. I think the management over at Anduril is really, really run really well. They're trying to do things that are more Silicon Valley based, where they provide way more value for not just for the shareholders, but for the taxpayers. And one of the things that we're seeing right now with the whole Doge thing is that, we want to be as efficient as possible with our capital, with our spending. So, a lot of the projects that we've, like literally the Department of Defense, I don't know how many trillions of dollars they've spent on the F-35. It's crazy the amount of spending that we've done on certain capital projects, and we're not in any safer of a position, and the wars tend to evolve. So why are we still buying technology that, it's like, the way that I would describe it is that in the modern warfare scenario that we're seeing, especially in Ukraine, you're starting to see like a $10 million tank versus a $10,000 drone. Now, just think about that. You're losing $10 million against a $10,000 drone, not even 10,000, like a $1,000 drone, Yeah. So the question is, why do you want to buy like 150 tanks? Like, wouldn't it just be better to build systems like loitering munitions that Anduril sells, So I think war is evolving, and Anduril is on the cutting edge of war. I think they're actually more in tune with the war fighting needs are, and I think that's their alpha compared to like the old heads who are still stuck in their old ways. And so, especially if the DoD ends up going into a more like how do I say it without sounding like too much of a bear? The DoD has this thing where they spend a lot of money on like useless shit. Okay. And their budget has never really been taken a look at like that hard. And they've I think Elon said it the best the other day. He's like, we're spending more now than we were when we were in 2 wars at the same time.
Yeah.
Like how do you spend more during peacetime? That doesn't make any sense, really.
That's
so
a fair point.
I think the thing is, if Anduril can provide the military with the right tools, it's worth it to not have to spend all this extra money on things that are not going to work out well. So yeah, I think, but it's all going to be based on the Trump administration and Elon and the people like Pete Hegseth coming to terms with, hey, like maybe we don't need to spend billions of dollars on a piece of equipment that may not exactly provide value. Instead, let's kind of like adopt technologies that give our warfighters 10x capabilities rather than, like if you think about like an army, like back in the day, you'd need like a 1,000,000-man army to go invade a country. Now you could probably take over a country with, a couple of battalions, especially if they have like the right technology behind it, so.
All right. Chris's Twitter in the chat. You're streaming SMCI tomorrow, right?
Yeah, me and Matt are going to be streaming SMCI. If you haven't followed the Cash Flow Chronicles on YouTube, yeah, you'll get our thoughts, and hopefully we'll all be celebrating or we'll be crying together. So,
all right, we're either going down with the ship or we're going up in glory. I'll see you tomorrow, Chris.
Yep.
Thank you.
Take care.
Appreciate it. Bye.